Good morning, folks. We are now live. Welcome to the Heritage Wealth Planning YouTube channel. I have 9:58 on my clock, so we'll wait for 2 more minutes before we get started. Just checking the weather here. Right here in Alpharetta, Georgia, got 76 degrees. It's going to get as hot as 91 later, but then come Monday and Tuesday and Wednesday, it looks like the heat has subsided to some degrees. That's good. In fact, it's going to be as low as 81 on Thursday. Is going to be our high on Thursday and Wednesday, 81. So that's good. Where I am from in Maine, the highs are going to be today 72. Wow. And then it's going to be highs in the mid 70s the rest of the week. So that's pretty cool. All right. So definitely looks like the heat might have subsided. I used to live in Texas, and they're still going to be in the mid to high 90s all week. I used to live in Virginia, and they're going to be, high 70s, low 80s. So that's good. It looks like we definitely have some heat that has gone away, at least in the Northeast and the Southeast for sure. Used to live in South New Jersey, and it looks like it's going to be mid to high 80s later on this week. So I hope where you are, it's the heat's going to subside some. I truly hope that for sure, because, man, this heat wears me down. This humidity in the South, woo-hoo. I know where I'm from in Maine, it get humid too, but man alive, that humidity, you go outside mowing your yard and you're just dripping sweat, and it just makes you tired. So we'll get started here. I got 9:59 according to my clock, and we'll get started here in just a second. I guess if you don't mind, if you can hear me, if you just give me the thumbs up thing or whatnot, I just my presumption is you can. But if you it'd be helpful to get the thumbs up there so I know. And you can see this is the epitome of formality here too. So I got my my little shirt on here, nothing fancy, but it's 10 o'clock. So hey, appreciate you jumping on board here. First and foremost, we're going to talk about Rhode Island and the tax law that has since come to place. We're going to read you not verbatim, but we're going to read you some of the new tax laws that you need to be taking advantage of. Because if you're not, you're leaving money on the table. There's no getting around that. If you like what we talk about here at Heritage Wealth Planning, the YouTube channel, go ahead and subscribe. Hit that little button. I can't remember if it was that side or this side, but there's a tiny little button that said subscribe, a little red button. Hit that, and then hit the notification bell to be notified for future content. Because I'm telling you, I have over 200 videos out there now, and the tax stuff is changing all the time. So you definitely want to subscribe, hit the notification bell. Go to facebook.com/Heritage Wealth Planning. Do a lot of videos there as well. So let's get right into it. This is from the Rhode Island Department of Revenue Division of Taxation. And Rhode Island Personal Income Tax Guide, right here, verbatim, modification for income from pensions, 401ks, annuities, and such sources. Interesting, isn't it? There's something that was missing there, was it not? And so we're just going to go over this. Section 1. In general, you are eligible for the tax break if you meet all 3 of the following conditions. And the following conditions are: A, your federal AGI, or adjusted gross income, includes taxable income from pensions, 401k plans, annuities, or other such sources shown on your federal tax return, which we'll get here in a second. You have reached the full retirement age of Social Security. Now, if you're born before 1960, your full retirement age is 66. If you're born after 1960, your full retirement age is 67. In fact, I need to modify that to some degree. If you were born in 1959, your full retirement age is 66 and 10 months. If you're born in 1958, 66 and 8 months, and so on. So essentially, anyone born after 1967, their full retirement age, or 1960, their full retirement age is 67. Anyone born before 1960, their full retirement age is 66 and some months. And so the new law only is applicable to you so long as you are hit your full retirement age. Your federal AGI, this is a critical thing, has got to be 80,000 or less if you're single, or 100,000 or less if you're married filing jointly. All right, now you got to be filing a joint return. If you're married filing jointly, your federal AGI or your single AGI is 80,000 if you're single, 100,000 if you're married filing jointly. So I need to talk about AGI. A lot of people get confused between taxable income and AGI. AGI is everything on the first line of your 1040. That's your adjusted gross income. So you scroll down there, it'd be line 37. That's going to change next year, but line 37, yeah, it's 37. That is your AGI. If your AGI is $1 above 100,000 and you're married filing jointly, you are not going to get the tax write-off. Okay, so if your AGI has got to be what drives you, AGI above 100,000 by $1, you're not going to get the tax write-off if you're married filing jointly. If your AGI is above 50,000 by $1, 80,000 by $1 and you're single, you're not going to get the tax write-off. So you got to pay attention to your AGI. Now, if you're eligible, because those three things you met, one, you have pension income or 401k distribution income or annuity income. Two, you're at full retirement age of Social Security. Again, 66 or 67, depending on what year you're born. Three, your federal AGI is below 80,000 if you're single and below 100,000 if you're married filing jointly. Not married filing separately, married filing jointly. If it is, if those three things apply, you are eligible for up to $15,000 from your federally taxed amount of pensions, 401k plans, annuities, and other sources will escape Rhode Island income tax. And that's these guys from the DOR, Department of Revenue, stating that. If you have IRA distributions, notice it is not in there. There's nothing from IRAs. It's only from 401ks, pensions, even annuities, not from IRAs. Assuming that you are eligible and are in the 3.75% tax bracket, this could save you approximately $563 per year in personal Rhode Island taxes. Now, that might not seem like much. That's year over year over year. That's $563, my friends. And if you're on a fixed income and you already got high property taxes, Rhode Island, that's real money. And you can't. So you got to be doing proactive measures. We're going to talk about that here today. What counts? What counts for the purpose of Rhode Island's new modification involving income from pensions or other sources? Again, we have 401k, 403b, 457 plans, military retirement pay, the thrift savings plan, military pension, government pensions, private sector pensions, and annuities. All those things apply towards a $15,000 per head write-off that you get in the state of Rhode Island. What doesn't apply? IRAs. And let's go with this. Now we're going to go show you this page here, and it's going to be hard to see. I put a link in the show notes, and I'll address it again. But this is on your 1040, and if you look at your 1040, you'll see line 16A. That's pensions and annuity income. Line 16A is pension and annuity income. That is the line that you can deduct $15,000 per head, taxpayer, as long as you met those other three qualifications. Notice right above that, line 15A, IRA distributions. IRA distributions are not applicable for the write-off that you get in Rhode Island. Very interesting, isn't it? If you file a 1040A, then it'll be line 12A is you want to see your pension income. If it's line 11A for IRA distributions, again, that is not subject. All right, so let's keep going here. Oh, yeah, and they do say, please note for convenience, some screenshots in this publication is for the 2016 tax forms for the tax year, and the form and line references will be different for future tax years. We just got IRS notification that they're going to change the tax forms for 2019. So what we see here today, and again, AGI is line 37, if I'm not mistaken. It might be another edition this year, but right at the bottom line of your first page of your 1040, line 37 is your AGI. That's what drives all this. This right here that you're seeing here is going to change next year, not in 2018 when you file your taxes in 2019, but for 2019 tax year when you file your taxes in 2020. All right, so let's do some examples. All right, so yeah, here we go. We're going to do some examples here. Oh, that's what I want to talk about. The Rhode Island legislation that created a new tax break uses the term pension and or annuity income, a reference to the line on your 1040, what we just talked about. All right, so here's an example. This is what I want to show you here. And again, if you have questions, thoughts, concerns, fire away. I mean, my goodness, I'm wide open. But I do like these examples I use. And this form is fantastic. Look, I did a state-by-state review of each state's taxes. And Rhode Island was very, just very user-friendly in terms of this specifically. And Social Security. We're going to talk about Social Security in just a second, too. A lot of these other states, like Utah, oh, my goodness. It's like having an anvil on my head. Or a vice grip squeezing my brain because I couldn't figure it out. It's like, man, and I'm not stupid. I mean, how could the average guy or lady figure this out? I mean, it's crazy. Anyway, so example, Noah is a retired federal government employee who receives income from federal government pension. A 1099-R is sent to him each year, showing, among other things, the taxable portion of his government pension. He enters the amount of that taxable portion on the appropriate line for his federal income tax return. Remember, everything is derived off the federal tax return. The amount counts as pension and or annuity income. Remember, we talked about that, line 16B. NOAA still must clear the other two thresholds, i.e. is he at full retirement age for Social Security, 66 years old or 67. And then he doesn't have more than 80,000 if he's single, or 100,000 AGI if he's married, filing jointly. Here's Emma. Emma's retired from a private business. She regularly withdraws money from a 401k plan. A Form 1099 is sent to her each year, showing, among other things, the taxable portion of the distribution will all be taxable. She enters the amount of that on the taxable portion on the appropriate line. The amount counts as pension and or annuity income, which qualifies her for the exemption. That means she can write that amount off up to $15,000 as long as the 80,000 or 100,000 AGI threshold are met. Here's one of the ones I like a lot, actually, because this is Liam. And this is where you got to be careful, my friends in Rhode Island. You got to tell people about this. When Liam retired from a corporation, he chose to transfer everything from his retirement savings plan at work directly into an IRA. At around the time he turned 70, he began making regular withdrawals from the IRA because there's something called RMDs, required minimum distributions. The total amount of these, and then the company sent him a 1099 to him reporting the total amount of these withdrawals. He reports the withdrawals under the IRA distribution tab line of his US 1040. Liam is not eligible for Rhode Island's new tax break because the break does not apply to IRA withdrawals, also known as distributions. That is the case even if Liam clears the other two thresholds of being less than 100,000 or 80,000 AGI and then being full retirement age. It cannot be stated any more specifically. Liam does not qualify. He's not eligible for Rhode Island's new tax break because it does not apply to IRA distributions. So if you're sitting there, you're about to retire, you're like, I should roll this over because everyone tells me I should roll it over because there's more options outside 401ks. I can do more things with it. It's more beneficial to my heirs. And there's some legitimacy to some of those arguments. You don't need a whole bunch of options. It's like the thrift savings plan if you're through the military. Thrift savings plan has everything you need, and the price to invest in the TSP is incredibly cheap. Your 401k, the price to invest, i.e. the cost that you pay, is cheaper than your IRA is going to be. And don't tell me about the options that you have. All those options are is a recipe for disaster for sure, because the fees go through the roof. And on top of that, you're going to pay more taxes. All right, so they talk about full retirement age. And again, we talked about that before, but just to reiterate, if you're born in 1960 or later, your FRA, full retirement age, is 67. I got tons of videos on my Heritage Wealth Planning YouTube channel that you need to subscribe to. Tons of videos on Social Security planning. That's the number one thing I do on my YouTube. I got over 200 videos, like I said, and the bulk, well, not the bulk, but the predominant amount are certainly about Social Security. So we talk about that. If you're born before 1960, your full retirement age is going to be 66 and potentially some months. So you got to be FRA for this to qualify. All right, so let's see here. Here's another example I think is pretty interesting. This is William. William is 64, single and retired. That right there should tell you he can't qualify because he's not at full retirement age. He could take his Social Security early. He probably ought not to do that, especially if he has a pension, which he does here. But I don't even need to read further. William's 64. He's not at full retirement age. I get that through in your head. Say, I cannot qualify for my IRA or for my yikes, for my 401k exclusion until I'm full retirement age at 66 or 67. Everything else is secondary. Now, could he take an early Social Security benefit? Absolutely. He should not, but he could. And I'll, again, look at my other videos to show that. AGI, I cannot stress this enough. How many people mess this up? They don't understand the difference between AGI and taxable income. In my book I wrote, and I guess this is a sales pitch for my book, The Tax Bomb in Your Retirement Accounts. And you can get it on Amazon. It's free on Kindle Unlimited. If you don't have Kindle Unlimited, it's $4.49 for the Kindle version. I can't remember how much I priced it for the book. I think it's like $10, something like that. But anyway, it's 75 pages. You got to get it. I don't have to. I mean, yeah, self-promoting, I get it. AGI is line 37. It's before you have your standard deductions, before you have your itemized deductions. My friends, most retirees, the vast majority of retirees under the new tax code are not going to itemize. If anyone says you need a mortgage for the tax deduction, just walk away. You do not need a mortgage for the tax deduction. Why? Because the likelihood of you itemizing your taxes in retirement is almost nil. In fact, now with the new standard deductions that are at $13,300 if you're over 65 per person, husband, wife are married, they have $26,600 of standard deductions right out of the gate. What does that mean? That means they're not likely to be itemizing. They're not. How would they itemize if they have, let's say, $10,000 of mortgage interest, even if they have that, which they probably won't? They might have, what, $5,000 of property taxes. That means they still need another $11,000 of itemized deductions just to get above the threshold of the standard deduction. Maybe they tithe. I don't know, but if they're tithing on $50,000 a year, that's only $5,000 a year. That still puts them well below the standard deduction. The standard deductions right now under the new tax law, the TCJA of 2017, the Tax Cut and Jobs Act, regardless of what you think about it, it doesn't matter. It's here. And you got to be taking advantage of this here right now, because 13.3 is the standard deduction per person who's over 65. 12,000 is a standard deduction if you're under 65. I'm 48. My wife is 44. We have 24,000 of standard deductions right out of the gate. Now, we do have children, 4 as a matter of fact, so we do get some child credits. That was thrown in there last second, which is good because I need those credits for sure. And we have a mortgage interest, and we pay pretty high real estate taxes, even though we live here in Georgia, because we're in Fulton County, and the real estate taxes aren't cheap here in Fulton County. Not like you all have up there in Rhode Island, but you got to understand, take advantage of your standard deductions. And so that means you don't care about itemization. I mean, you may. Frankly, I doubt you care about itemization if your income threshold is 100,000 or less. I just don't think that's going to be an issue. So when someone says you need a mortgage for the tax deduction, no, you don't. You're still paying tax. I mean, you're still paying interest. You're still paying to somebody else. It's not going to you. The tax deduction is only a deduction off a percentage of what you already get to pay in interest. I never understood that. All right, so here's another example. This is Sophia. She's 82 years old, and she's single. And for 2017, she had federal AGI of $75,000. She is eligible for Rhode Island's new tax break involving 403B pension annuity income because her $75,000 is below the $80,000 limit. Here's James and Isabella. James 72 and Isabella 68. They are married, retired, and file a joint personal income tax return. For 2017, they have $175,000 in total federal AGI. They are not eligible because it exceeds $100,000. So additional examples. This is just a wonderful sheet they should get. The following examples, let's see. Oh, here's Benjamin. He's 65. Immediately, he's not going to qualify. Why? Because he's not a FRA. So if you're not 66 or 6, a broken record, I get it. The minute you say Benjamin's 65, so that doesn't qualify. Here's Mia. She's 72, and she's single. She had $1,000 of interest income from Rhode Island municipal bonds in 2017. Her income also consisted of $15,000 Social Security, $20,000 military pay, $20,000 taxable IRA distributions, and $24,500 of taxable IRA distributions. Mia qualifies for the deduction because she has reached her full retirement age, and some of her 401k plan distributions and military pay counts as a pension and annuity distributions, and her AGI is $79,500, which is $500 shy of the $80,000 limit. Now, her $1,000 in municipal bond interest and her IRA distributions do not qualify. So just keep that in the back of your mind. That's not a qualified event. Here's Jacob. He's 72, who is single. He has $38,000 in federal AGI, which consists of $15,000 from Social Security, $10,000 military benefit, $8,000 in taxable IRA distributions, and $5,000 in 401k. Is he eligible? Yes, but only part of that, because his $10,000 military pay and $5,000 in taxable 401k will be eligible. That puts him at the $15,000 threshold. That's what you need, the $15,000. His $8,000 in IRA distributions are not eligible for the Rhode Island exemption. So he has $10,000 taxable military pension. He's got $5,000 taxable IRA distributions. He's got $8,000 taxable IRA distributions. The IRA distributions are subject 100% to the Rhode Island income tax. The military pay and the 401k distributions are not. Keep that in the back of your mind. I'm telling you, Do not just blindly roll over your 401k, 403b, TSP, 457 into an IRA. You will pay more tax in Rhode Island. There's just no other way around that. Let's see here. Let's keep going because the one oh yeah, here's Michael and Charlotte. This one I like the best actually. And it's weird because they got a guy named Liam. I got a boy named Liam. They got a Charlotte. And my wife's named Charlotte. So they must have had me on their mind, even though I've been living in Rhode Island. So Michael's 68, Charlotte's 67, and they're married filing a joint return. They have a federal adjusted gross income, AGI, of $95,000, which is made up of $50,000 in wages from Michael's job, $25,000 in taxable military pay, and $20,000 in taxable distributions from Charlotte's 401k. So $95,000 below the $100,000 threshold for married filing jointly. They also have 68 for Michael, 67 for Charlotte. They're in their full retirement age. They're beyond FRA, full retirement age. And they have distributions from pensions and 401k distributions. They can each take $15,000 distribution off the Rhode Island income tax. It's per head. It's per head. So if Michael gets $15,000 deduction, not deduction, just it's not counted in Rhode Island gross income, as does Charlotte. So they both have $15,000, which means their Rhode Island taxable income will be reduced by $30,000 right out of the gate. Oh, and guess what? When they start taking Social Security, not taxed either, because the same thing's applicable to the Social Security benefits you receive. Rhode Island is one of the few states that taxes Social Security, but everyone thinks that means everybody gets hit with taxable Social Security. No, you don't. If you're married filing jointly and your AGI is below $100,000, you don't pay tax on Social Security. If you're a single taxpayer and your AGI is below $80,000, you don't pay tax on Social Security. And so if you're just looking at Rhode Island's tax Social Security, I'm not going to, that's a bad place to retire. There's way more than that to look at the numbers here. All right. Now here's Ethan and Emily. They have AGI of 103,000. Ethan's 69, Emily's 68. AGI of 103,000. Don't qualify. Immediately don't qualify. So the fact that they had a $3,000 IRA distribution put their AGI above the $100,000 threshold means they don't qualify because they're above 103,000. If they did not have the IRA distribution, they would qualify. Isn't that crazy? Or if that IRA distribution was from a Roth IRA, which is why I say the tax bomb in your retirement accounts and how the Roth IRA can help you avoid it. So in this case, an IRA distribution put them over the AGI threshold, which means they lost $30,000 of income exclusions from the state of Rhode Island. On top is going to make their Social Security taxes. All right, and that's just Rhode Island. On top is going to affect their IRA, their taxable income with the feds. It's going to affect their taxable distribution, their taxable income with the feds, their Social Security taxation with the feds. It's going to affect everything in terms of their Medicare premiums, Part B and Part D as well. So it's a five hitter. I don't even know what you call it. In baseball, we call it a four bagger. Here we call it a five bagger. It affects your Social Security. It affects your income. It affects your Medicare. It affects your qualified dividends and long-term capital gains. And it affects your Rhode Island income tax. And it affects your Rhode Island Social Security tax. So it's a six bag. It's bad. All right, so that's pretty. Oh yeah, here, last one I want to read to you here. I thought this was good. Ethan and Emma again. So Ethan is 68 and Emma's 64. So let's pause for a second. Emma's 64. The minute you hear that, you say, "Oh, doesn't qualify because she's not FRA, full retirement age." They have $35,000 in taxable Social Security benefits. They have $25,000 in wages from part-time jobs, and they have $20,000 in taxable income from the retirement plan. The couple's $80,000 qualifies for the Rhode Island exemption. The couple's AGI is below their, so again, this is 20, so it does qualify for sure. But what does not qualify is that Emma is only 64. She's not at her full retirement age. So she does not get a $15,000 distribution exemption because she's not at 66 or 67 for her FRA. However, in the same thing, I'm telling you, just gotta look at Social Security too. So under a separate section of the law involving another separate tax break, which is not subject of this publication, their federal Social Security benefits will escape tax too. Will escape tax because they did not go over $100,000. So just keep that in the back of your mind. If you keep your income below 100, you won't pay Social Security tax. if you may have to still pay tax on Emma's portion of the IRA of the 401k distribution because she hasn't reached her full retirement age. But once she reaches 66, Social Security won't be taxed, and she'll get a $15,000 exemption on top of what Ethan's getting right now. So that's a wonderful thing right there. I love it. And I said they give us a nice little chart that talks about treatment of income in an example, and they say very explicitly, IRA distributions are treated as income for Social Security. Lastly, and this is what we'll talk about, I want to talk about a couple of things from Rhode Island. Under a separate section of the law, the couple also determines the impact of tax break involving Social Security. To qualify for that break, your federal AGI from income from Social Security benefits, you must have a Social Security benefit is what I'm saying, excuse me. You have reached your full retirement age, and your federal AGI is below 80,000 single or 100,000 married filing jointly. If you qualify for all these three hurdles, you have Social Security benefits, you're below 100 for married, 80 for single, and you've reached full retirement age, you won't pay tax on your Social Security benefits. What puts you above the threshold? What puts you above the threshold? IRA distributions. Keep that in mind. And that's it. Maybe I'll just jump in a little bit on the Rhode Island estate tax. Just keep in mind, my friends, there is an estate, and I'll do a separate episode specifically on this. Rhode Island does have an estate tax. All right. If you have a tax at estate over 1.537 million, and that includes everything you own, life insurance and your home and your IRA, 401k, TSB, all that is thrown into the Rhode Island estate tax. If you own that and you have an estate over that amount, your estate is going to pay estate tax. Just keep that in mind. We'll talk about that in a different episode at another date. I'll go through the state-by-state lists of the Rhode Island and all the other states that have a state inheritance tax too. Anyway, I hope you found this helpful. If you haven't, by all means, subscribe. Like I said, go down there, subscribe, like the Heritage Wealth Planning Facebook page, just facebook.com, Heritage Wealth Planning. Go to Josh Scanlon. Just type in Josh Scanlon in Amazon.com. That's SCANDLEN. I'll put the link here in the show notes. And you can see all my books on there. Like I said, for Kindle Unlimited, it's free. For the Kindle version, it's all $4.49, and then the hard copy is a little bit more expensive. I think it's like I said, I think I got this one because it's in colors, $19. That might not be applicable to you guys because this is more for 30 to 40-year-old couples. This one I price at $9.99 if memory serves. So if you like what you see, subscribe, comment down below. Thumbs up are always helpful for sure. And don't forget to hit the notification bell to be notified for future content. Hey, look forward to seeing you next time at the Heritage Wealth Planning YouTube channel or Heritage Wealth Planning Facebook page. Thanks now.